Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. I'm very privileged and honored to have Mr. Lior Gantz today on my program. Mr. Gantz has been called a thrill-seeking entrepreneur. I like the sound of that, yeah, and by his team, and I know that's true. He is with Wealth Research Group, and we're going to talk about wealthresearchgroup.com and everything they have to offer, all the free content, as well as the premier content on there. Mr. Gantz has been in the market since the age of 16. And now he's bringing those proven strategies and advice to people from high net worth individuals to people like you and me, the retail people, the subscribers and members to Wealth Research Group. He's an advocate of meticulous risk management, balanced asset allocation, and of course, and I always advocate this, proper position sizing, so important. Mr. Gantz, thank you so much for joining me today on Looking at the Markets.
Yeah, thanks for having me.
Yeah, really appreciate your time today. Now, I wanted to talk. There's so many things to talk about. It's such an interesting time. I mean, today.
Let's go.
Yeah, we have new all-time highs in the equity indexes. For the people who were into the Trump trade, it's kind of working so far. I mean, it looks like since November, the market's either gone up or sideways. It's just stair-stepping its way up. Is this sustainable, or should we be hedging heavily right now?
Well, first of all, on a long-term basis, U.S. equities have been the best performing asset for 212 years, going all the way back to 1812. So you got 205 years. Nothing can beat the American enterprise system. Obviously, you've seen insane changes throughout the last 205 years, but the compounding machine that is called the American ingenuity and the vision and the free market system, through thick and thin, through 2 world wars, famines, flus, the dollar system, the gold system, whatever it was, civil war. U.S. equities compound at about 7.5% per year, which can make anyone rich throughout a 5 to 6 decade period. So that's why it's important to understand that with investing in U.S. equities, you will get richer throughout your life through the power of compounding and reinvesting your dividends, but it won't be a 2 to 5 year plan. It will be like a 30 to 40 year plan. That's why you see a lot of millionaires, which are called millionaires next door, which would be your millionaires at 60, 65 that have just saved up and put their money away in great companies and have reinvested the dividends in those companies. So whether or not you have enough discipline to do that, probably not, because the latest study, David, is that people hold on to stocks, and I'm talking U.S. equities, companies like McDonald's or big companies, for 6 months. So if you have the patience to hold on to your companies for more than 6 months, you've got an advantage over the majority of people out there. And it's funny, Dalbar, which is a large research company, have done research from 1990 until 2010, if I'm not mistaken, or don't quote me on the years, but for about 20 years, mutual funds have returned about 6.5% or something like that, and the average investor returned 2% within those mutual funds. Just playing around, going in and out of those mutual funds, you killed 66% of the gain, not including the fees that you pay, etc. For most people, going long the best companies in the world and doing nothing would be the best strategy if you're looking for a 30 to 40 year play. But if you want to shorten that thing into 6, 7, 8 years, the way I've done it, and become richer, you need to go in on smaller companies. Basically, a $13 billion or a $20 billion company will not be a $200 billion company overnight. It's just a fact of life, right? So you need to go and you need to diversify and invest and speculate in smaller vehicles using the right asset allocation and the right position sizing, not stressing yourself out or your family out, and being very, very surgical, David. and finding companies that have I would say it's those superstar people that need to go behind these companies to really make it happen. Okay, so any dumb idiot, well, I wouldn't say dumb idiot, but any amateur can run companies that are big and are branded and etc. In fact, the only reason I'm saying that is because Warren Buffett said that he only invests in companies that a dumb person can manage. So not many mistakes can happen with them. But with startup companies or with small companies, you really need to have people that can do it. So I hope that kind of answered your question. What was the question again?
No, you gave me everything I asked for and more, and I appreciate that.
I lost.
It's okay. Yeah, just your outlook on equities, perhaps in the long term.
Oh,
and for the rest of 2017, let's say.
Sure. Okay. So, in my opinion, the U.S. equities are, I think they're fairly valued, and I say that because the interest rates are zero. So when interest rates are zero, the PE ratios, so the multiples that people pay for stocks, go higher and higher. We are now the S&P 500, NASDAQ, the Dow Jones are trading for valuations that we've never seen, unless it was the 1890s or the Great Depression. But that's just because the prices went down, the earnings were out of whack, and then the dot-com bubble. So we are in very unprecedented territories with the prices that people are willing to pay for equities. But that's because bonds are basically yielding nothing, right? When you factor in inflation and when you factor in their yield, you're not making money, you're losing money.
Sure.
On most of these, either they're corporate or the treasuries or other countries like Germany, etc., Japan. The junk bonds, obviously, they pay a yield, but the risk is the risk reward ratio is even better with stocks. So that's why this can go on. This can go on for another 3, 4, 5 quarters, where you'll see the Dow Jones and all these and the big indices go up another 20, 30, 40, 50%. But then, think of it this way, David. Do you think it's a bubble? It's really not. Most people do not own stocks.
Right.
Most people do not own stocks. This is not a blow off top yet. It will be. It will be when you're when you invite over a plumber and he starts talking about his portfolio. That's when a bubble appears. But right now, it is fairly expensive, but not in a bubble yet. So, in my opinion, you will see the large indices go higher and higher. The U.S. side, Europe, and you're going to start seeing China as well. So, yeah, there's another year to this.
Really? What do you think's going to come first? Dow 40,000 or Dow 10,000?
Probably Dow 40,000. I don't know if it will get to 40,000. For you said before that there's free content in Wealth Research Group and there's premium content. That's incorrect. When I launched Wealth Research Group, I said there will be no threshold. So all of our content is absolutely free. So if you go on the website and you go on the top menu, you'll see a button that says special reports, and that's our top-notch, highest quality reports, a wide array of reports, anything from timeless principles of success to marijuana investing, which we can get to later, but I think it's a phenomenal opportunity, to mining, gold, silver, etc., and also cryptocurrencies. But it's even more wide array than that. You can download these amazing reports that we've done for free. And then obviously there's also the newsletter. That's where we every 2-3 days we really make sure that we give you the big picture and what's going on. And also we're very surgical, but around once a month we will do a full-blown publication about a company we really believe in. And we've had in 2016 I want to say 12 companies that have doubled or more. We had 4 of them that went over 400% gain. It was a hot year, regardless. But we've outperformed all the small indices that track these companies. But to your question again, the research that has to go with buying companies is immense, and I think Dow 40,000 can happen because and what I told subscribers is Dow 36,000. That's what I think it will go to. So we still got a long ways to go with it, and it's just because that's the mentality of people. It's a blow off top. Most people are not invested yet, David. Most of the money that you've seen going into this is institutional money. Governments have printed trillions of new currency units, and through the QE programs, through all kinds of things that they do, and most of these high net worth people, that's the money that you see. You see a lot of these algorithms and robots going into the market, but not the retail investor yet. And I think that's coming.
Plenty of cash.
Unfortunately.
Yeah, unfortunately or unfortunately. Plenty of
unfortunately, I would say for them. Yeah.
Interesting. Plenty of cash on the sidelines, and we'll find out what the future holds. I wanted to talk a little bit about, you touched upon wealthresearchgroup.com. So much free content on there. I don't know why people wouldn't just go ahead and visit that. At least check out what's on there. I'm looking at all the special reports. You've got everything from cryptocurrencies to precious metals, all kinds of cool stuff on here. And these are all free. You just put in your email address.
Yeah, they are.
That is so cool. You got your financial fortress. What is the financial fortress?
Well, the main theme of wealth, going back to about 2011. I'm sorry. Let's go even further back. In 2009, I got into U.S. real estate. America was on sale. I built a wholesaling business. Let's not get into what wholesaling real estate is, but it's a niche within the real estate market, and we sold that company in 2011. Then I started a boutique fund, around 20 people, 20 high net worth clients, and luckily we were one of the first to go into Bitcoin about $9. And I gotta say I sold it I sold it 100. So the fund made a lot of money, but those people probably pissed at me. Anyway, we dissolved that fund, and because I just had the passion to build a newsletter which was not for 20 people, not a boutique. It was broad-based, and I wanted to get to the larger audience. From the time I was 16, I coached basketball, and I did all sorts of things that have to do with education. So I love to research and then share that information. And that's the financial fortress is the theme for Wealth Research Group, because I think, David, most people are not financially educated, it's because of the system that we grow up in. So I'm not a normal guy with regards to money. I started reading financial books at 13, and but at 16, my parents signed a waiver so I can run my own investment account in the bank because I was a minor, etc. So the financial fortress for me is just people must become financially fortified, and the way you do that is, first of all, you need to educate yourself about money, finances, investments, etc. And if you can do that, that will really put an impact on your life. You'll become more confident because money won't be like this weird thing. It will be something that you can use. And honestly, if you think about it, it's real easy. You got 3 buckets, and one bucket has the bottom is open. So any money you throw in there, it's gone forever, and that's your spending bucket. That's where you funnel your everything you want to do with your lifestyle: house, vacations, cars, food, etc., rent. And you got another bucket, which is your savings bucket. That's where you need to learn to fill that thing up and make sure you're saving money. But then you got the third bucket, which is investments, and that's where you want to fill it, and you want that to grow. So savings don't grow, but investments grow. And if you can just master those 3 buckets, you're ahead of most people in the world. And because most people live paycheck to paycheck, 90% of people in the world. And so, look, the bottom line is that Wealth Research Group is about making sure that I give you the best research that personally works for me. And so we focus on the big picture, what's going on in the economy. We focus on specific investments, and we focus on just personal finance, great ideas that have to do with your day-to-day life and how to if you're an employee, what do you need to do to make sure your salary doubles or triples, some attributes in your own characteristic, in your own character. But then we go on also, and like I told you, we really make sure that we publish specific companies and stocks that we believe in, and we've had a lot of success with that as well. So it's a dual mix.
I think it's great. These are the things I wish that they taught in middle school, high school, elementary school, but they don't. And so,
Definitely.
but fortunately, you're providing education the best that you can, and doing an amazing job on wealthresearchgroup.com.
Thanks.
Yeah, people should check that out for sure. So many topics to touch on: gold and silver, and the dollar.
Cool.
Gold and silver. First of all, I'm into the ETFs myself. SLV,
okay.
GLD, IAU are some of my favorites because I just don't feel like getting the physical stuff and insuring it, storing it. But maybe I'm foolish. Maybe I need to get some of the physical stuff, as well as the dollar. If I want to trade the dollar, I get the UUP, which is the ETF for that. The dollar's been beaten up this year. Talking about the U.S. dollar here, of course. What is your perspective on all this?
If I do the ETFs, I short them. It's a short-term trade. If I see that gold's getting beaten up, what I would do is I would short some of the gold ETFs, or just buy the short ETF, and then on the flip side, I would go ahead and buy some of the quality companies that I like. So if you want to think of this as a strategy, I short the entire market and I buy cheaply the ones that I think are 10 baggers, or companies that will go up 1,000% within the gold cycle, which I don't think has started yet. Not at all. I mean, and with regards to physical, David, the physical commodity, gold and silver, both of them are precious metals, and they're over time, over thousands of years, they're basically no different than any other element in nature. So you got zinc, copper, aluminum, etc. But gold and silver, those two specifically have the attributes to be money. Civilization and society have tried many things as money, from large stones to clam, to shells, rice, silk, alcohol, cows. A lot of things have been used as money to create societies, but nothing has worked like gold and silver, and that's true for today as well. You can see that with the price of gold, specifically with gold, which is still viewed and used as reserves for governments and central banks, etc., and by people as well. So that won't make you rich. Holding gold and silver in your portfolio, the physical metal, is an insurance policy against reckless management of the fiat monetary system, which is what we're all part of. That the payment system that the banks and the governments own, it's the fractional reserve lending system. That's their system. When you open your Bank of America account, you see all those numbers. Those numbers are currency units that you can use, but you don't actually own them. They're owned by the system, and you just get to move them around and transact with them. So gold and silver you actually own. That's it. It's money. So if anything catastrophic happens, that's your power. That's your purchasing power. That is the ultimate purchasing power. But gold goes up 5, 6, 10% a year. That's not something to get overly excited about. Now the junior mining sector, or small gold companies, so small, silver companies, zinc companies, uranium companies, etc., cobalt companies, those vehicles, they're a few $1 million to 50, 100 million in market cap. But when they discover deposits, or when they de-risk them, when they make them more economical, and you can start unveiling the value of them, and investors see that they can become cash flowing producing mines, those companies, they go up 500,000% in 1 year.
Yeah.
Even in months. And if you can find the right people, I'll give you an example. We are, Wealth Research, we love Gold Mining Inc. So the ticker will be TSXV Gold, actually GOLD, or on the U.S. side it's GLDLF. And the reason why, and you can take a look at the performance.
Yeah. This
company, just to give you an example of why I tell you that you need immense confidence when you do these things. Amir Nani, the guy who founded the company, which I'm currently, as you can see in the background, I'm in Vancouver, BC for a mining conference, and I just sat down with him yesterday. The reason we love this specific company, for example, is because it was formed in 2011, the worst time for gold. It was topping at 1900 and went straight down to 1100 in 6 years until 2016. But the company, during this brutal bear market with all these other companies trying to survive and many going bankrupt, they outperformed the S&P 500. So you got a junior mine, and the way that you do that is if you can find people that know what they're doing, that know how to create value, then forget about the ETFs. The ETFs track the commodity, and you can make much more money with a higher degree of certainty. David, I don't know if you know this, but GLD is leveraged 250 to 1. If people start taking physical delivery on this, that thing falls apart. It's not a real vehicle. It's a short-term vehicle. That's why I'm telling you that I sometimes short. But real companies with gold, with millions of ounces in the ground, things that can become producing mines, or that can be sold to the majors, which are desperately looking for deposits. Those things can really fly. So in 2016, for example, we issued an alert on this company when it was trading for under $1. It went to over $3 Canadian. So those are some life-changing gains.
Yeah.
In the gold sector right now, on a more broad basis, not talking about specific companies, what's missing is inflation. People have been saying for years, look, the governments are printing trillions of currency units, and interest rates are at zero. Why is it gold exploding? And it's not that simple. The fact is, central banks are responsible for about 20% of currency. The rest of the 80% is you and I. Swiping our credit cards, taking out car payments, student loans, mortgages. That's us. We create currency. And for the last 7-8 years, people have been closing down debts. So you've got the central banks creating currency, and you got us, which are 4 times bigger in the currency we create or dissolve, closing down debts. So you actually see a contraction in the overall currency supply of the world. It's deflationary. That's why you don't see inflation, even though that banks and governments are doing this. But the dangerous side of this is that when you do this, all that money goes to the upper echelons of society. And when governments create currency, it goes to the commercial banks or to the contractors of the U.S. government, like the Army, etc. All these private contractors, and it doesn't go to you and I. So we don't feel that, we don't see that, and that's why the populist vote elected Trump. That's why there was the disgust with the establishment. And what I think will come next for inflation is you'll see them start to raise rates. And if that doesn't work, they will need to get very aggressive with their with printing new currency units, and I think that will trickle down to Main Street, either through universal income or it can be a myriad of different strategies that they're contemplating right now. But the bottom line is, inflation will start creeping up in the coming 1 to 2 years. Just so you'll know historically, and for your listeners, inflation creeps up quickly. So it will be 1% in 2017. It will be 10% in 2018. It goes real fast because it's a paradigm shift with the general with the consumer. But right now, I don't see that happening, and therefore, right now would be the time to accumulate cheap shares of undervalued companies in the gold and silver. The zinc sector is very attractive. Uranium, absolutely attractive. It's insanely how attractive it is. And you can go on Wealth Research Group and kind of look over the special reports and pick the ones that are in the commodities or in the sectors that I mentioned that you like, and kind of download and see what we're all about, and obviously the newsletter as well. Yeah. So, again, I don't see gold making 52-week highs in the coming quarter, but I do see it going over the 1,500 within the next year and a half, and I do see it going over $2,000 per ounce in the coming cycle for sure. And for these junior companies, if you position right, I believe that with Wealth Research Group, what we're doing, you will take profits on companies that will go 5 to 10 times, and if we're lucky, even more.
Going for the 10 baggers or more. I see why they call you thrill seeking now. It's starting to make sense to me. I like it though. You're picking out the best of the best. You're not just playing it safe with the GLD, the SLV. You're picking out the smaller mining companies that really are poised for possible growth. I like the way you do that. People should
hypergrowth.
Yeah, hypergrowth, and people should check that out on wealthresearchgroup.com. Wanted to talk about people who are concerned about the dollar becoming devalued. It's been beaten up this year so much. As an alternative, people are getting into cryptos.
Sure.
They also like the fact that cryptocurrencies are deregulated, so to speak. They're not hopefully at least for now. Not as prone to manipulation by federal influence. Hopefully it'll stay that way. What do you think? Do you like the cryptos?
Well, just so we're clear, in 1913, the Federal Reserve Bank was formed, and since then, if you put $100 in your pocket in 1913, and you take that $100 now out of your pocket, in purchasing power, you have about $3. So what $100 purchased back then is now $3. So overall, over the long term, fiat currencies are a very bad vehicle for retaining value, and therefore, cash is good because it's liquid, and for the short term, you always need to have about 20% cash because of opportunities, right?
Sure.
But cash is not an investing vehicle. Over thousands of years, we've never seen money which is abstract, which is not an atom, not a tangible item like gold and silver. Cryptocurrencies are a new form of money, a new form of transferring wealth within society that is totally abstract. It's a cryptographic entity, and therefore it's something new. So it's the proof of concept is definitely we're not there yet. But the technology, the blockchain technology that this is based on, and everything that has to do with cryptocurrencies, I think it will go mainstream. As I said, I was lucky to be early on Bitcoin, and I think cryptocurrencies as a group will grow, but I think many of them will be obsolete and not with us in a few years. So it's very important to see how you invest in it, because I think most people will lose their shirts with cryptocurrencies, and not make a lot of money from now on. The second phase of cryptocurrency are now coming. So one thing would be scaling, how you scale these, because big companies cannot use cryptocurrencies. There's limitation on transaction amounts, and all kinds of stuff. Scaling is the next phase for this. Interoperability. So how you you have Ethereum, I have Bitcoin. How do we transact without intermediaries? That's another problem that a lot of smart people are trying to solve right now. So these are two problems that you'll see the community facing in the next while. And we are at Wealth Research Group, we are going to start featuring publicly traded companies that have to do with the blockchain and with cryptocurrencies. Mining companies, so the people that mine the cryptocurrencies, but security is going to be the main issue.
Yeah.
So companies that can provide security to make sure that cryptocurrencies are not being used for terrorists, for criminal activity, for terrorist attacks, etc. That is going to be very valuable, and the companies that can create technologies to do that are going to be very important in the cryptocurrency space. So definitely, that's something that we are going to do. And I'm actually meeting with 7 CEOs as we approach August. So expect many things on that front going forward. It's going to be exciting. I am very bullish on the sector itself, but very surgical with what I'm looking for right now. Yeah, and by the way, just so you'll know, we did in February or March. In March, we did issue a buy alert on Stimit, and that thing exploded like I think 1,400%, bottom to top. We also covered Monero very early on, Ethereum very early on, and you can go to our website again, and you can download the special report about cryptocurrency, and you'll see that we talked about this Dash. We talked about it a lot, and I had on our YouTube channel, we've had many top cryptocurrency people going back a while. So you can't be wrong with these cryptos right now. But the second phase with government intervention, starting to tax them, start to come down on individuals and people that made a lot of money. And this is changing. It's a changing thing, and it will be important to see how this develops, because if you think about it, David, it's a competing currency system to the government issued US dollars.
Yeah.
That's what it is. When you buy cryptocurrencies, you have to take US dollars, you have to take money out of the system and put it into a new system. So it's going to be very important to see how governments are involved in this.
Totally agree. And finally, the perennially interesting and popular topic, at least among my audience and among myself, is marijuana stocks. Yeah. The pot stocks. Yep. People are constantly emailing me about that. People have been very excited about the Canadian sector, Aurora, Afria, Canopy, Organogram, and so on, but they still are interested in which stateside American pot stocks are poised for growth. How are you on the industry overall, both American and Canadian and elsewhere?
First of all, regarding those companies that you mentioned, I have no affiliation with them, I haven't dived into them at all, so I have no opinion on them. But overall, let's talk about the sector. And before we do that, I just want to make sure that I do mention this. Wealth Research Group, with my own finances as well, 85% of my net worth is in cash flowing assets, and it's either in rental real estate or dividend companies that I believe will make me, will make me and our subscribers richer over the long term. And if you go on the website again, the top menu, the left button is called Wealth Stocks, and those are the companies that I believe in 20, 30 years you will look back and you will say, hey, that thing paid my son's tuition for college, or etc. These are companies that you can trust for the long term. I put at least 4 or 5 months worth of research into them, and the buyout prices are very strict with them. With 15% of your money, I think it's important to see if you can shorten the time it takes you to become wealthier with investments. But obviously, going even further, your career, your main business, your main occupation will always be the main driver of income in your life. So it's important to understand that. Do not get the illusion that investments will make you uber rich and you're going to live on your private island. That rarely happens. It's an important part of your life and your portfolio, and it's fun. It's something that is very fun to see new business and read about new business, etc. But very important to stay very cautious, to be conservative with it. So with 50% of your portfolio, we do love the small cap mining sector, the blockchain, Bitcoin, cryptocurrencies, and marijuana. I'll tell you why I love the marijuana sector. One, there's only one chance now to be the pioneer generation, the end of prohibition generation. Yeah. In 30 years, that's it. So, and the second thing I love is the demand is already there, David. There is a huge market for medicinal and recreational marijuana, and what's going on is just that market is just moving to become legal. So you're taking existing demand and just moving it to legal. This is not a new industry. It's a very established industry, but it's moving from illicit to legal. And now you're seeing a flood of entrepreneurs with great ideas coming into the sector. Yeah. California is going to become legalized on the 1st of January 2018. That's going to dwarf anything that Canada or any of the other states that have been legalized thus far in the U.S. have to offer. It's a 39 million population with an insane amount of tourists every year. That is the mother lode right there. And any company that can be there or can facilitate that market will be amazing. And again, the big deal here with marijuana is there is from inception, these companies make a profit. There is you're buying a company that makes money. Your shares are not speculative. They are an investment in a company that makes money. If they liquidate the company, you will get money. There's profits there. So it's very unique. It's a small cap sector with profits, and you don't see that with any high tech company. That when it starts, it's just an idea, right? And they raise money and they develop. They make zero money. Marijuana companies, they sell product. Or they have a service, and it's a much safer investment overall. Now, when it becomes federally legal in about 5, 6, 7, whatever years, that thing will be insane, because all the big pharmaceutical companies will be able to join the industry, make acquisitions, and companies that you will get in today that are worth, I don't know, $20, $30 million Canadian will be worth billions. So, and this is a limited opportunity, a window of opportunity right now. So I love that sector. Honestly, in the last month, we've trimmed down about 130 companies that we looked at, private and public, to about 5 companies that we absolutely are meeting with the CEOs. In fact, they're in Vancouver right now. So I'm meeting a couple of them, and then I'm flying to California from here to meet another, a few other ones. But look, people will make a lot of money with marijuana companies, and if you have a 21st century mentality, you understand that marijuana is a plant, just like tea is a plant, right? And it's going to become legal. It's going to become legal worldwide at some point. Germany has already legalized it at some extent. Israel is making moves. Uruguay or Paraguay, I'm sorry, is completely legal. It's not reefer madness anymore. It's an amazing plant with exceptional attributes, advantages, and it's not what it was 60 or 70 years ago. That's it. Those days are gone, and you will see companies and entrepreneurs, big entrepreneurs, going into the sector. Just to give you an idea, Peter Thiel, the guy who founded PayPal, is putting money into this industry. George Soros is buying companies that that are in the ancillary industries, so they provide the lighting or the warehousing, etc. Warren Buffett has bought companies that have to do with the warehousing marijuana companies. So, look, it's a huge deal, and anyone who has any prejudice towards it, I think it's a time to lose that prejudice and make sure that you go in there. You can go to wealthresearchgroup.com/cannabis profits and download the special report, and you'll see the immense potential of this industry. This is the fastest growing industry in America right now. And the beauty about it, David, is it's not an outsourced industry. You can't outsource these jobs. All the states will want these jobs. All the states will want the tax revenue. Colorado, which was the first state to become legalized, you see the crime rates are going down. Unemployment is the best in the country. It's working. It's not what people thought it would be, stoner madness. And yeah, we're going to cover in 2017. We're going to cover a few companies for sure that are exceptionally undervalued. In fact, one company, I just got to tell you this because this is insane. The market cap is like 11 million Canadian, and it's gonna turn a profit of about 25 million a year this year. It's insane.
Excellent.
So
wow, so much to think about. People need to go to wealthresearchgroup.com. Why not download those special reports? Take advantage of the Financial Fortress, the wealth stocks, everything on here. There's no reason not to. I want to just want to mention all of your social media. On Twitter, you are at Research Wealth. On Facebook, your Wealth Research Group, as well as on YouTube. Type Wealth Research Group into the search box. They'll find you.
Best thing to do, David, is our most active social media is YouTube, where I interview, like your interviews. We do a lot of interviews as well. So that's a great prospect. But honestly, most people, what they do is the newsletter, because every 2-3 days we publish our highest quality and our most current information. And so that's where most people that want to follow our work go to.
Yeah, and people should. Excellent. So are those the best ways to contact you? Just go to the website, or how can people get in touch?
Well, if you want to personally get in touch, you can use the Contact Us form. That will be the best. I answer all questions. So definitely, yeah, I'm open.
So much to think about, so much to learn. I've learned a lot today. Mr. Lior Gantz, thank you so much for joining me on Looking at the Markets today. You're welcome back anytime, sir.
Thank you. Thank you for having me.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.